as well, and plug all of the leaks because everyone wants to know what's happening.
But as a viewer, I would love for the Kartavya to be shown to me while I'm sitting in Mumbai or wherever in the country.
I am sure government handles will have a whole walkthrough. They're very, very social media savvy.
Hey, that won't be on your favorite channel, NDTV Profit.
Correct. That will come soon. All right, good plug then. Gautam Duggad with us this morning as, we're getting to that part where we give you a bigger picture of what's happening in the markets. Gautam, very good morning to you. Thank you for joining us today. Now, if I look at your note, I look at the whole host of India strategy notes, it seems that we are on the verge of a massive bull run. But then I see the screen and I'm seeing a very different story. Why is that?
Tamanul, good morning. Thanks for having me. I don't know where you're getting that impression of a massive bull run because we are talking about a 10% earnings growth for the year and then 13-14% earnings growth next year. So that expectation that you have of a massive bull run is betrayed.
One second, let me reword. I'm not saying I have an expectation. If I read your note and the optimism in it, and I read all of the notes today, if I read what Citi is saying, MS is saying, everyone's so optimistic. But that's not what the screen is showing.
So Tanu, I'll speak for myself. What we have written is we are expecting 10 to 12% earnings growth. We're trading at 21 times on Nifty. If those earnings expectations are met, then markets will, move in line with those earnings. So 10 to 12% return in the next 12 to 15 months is a possibility. Now, whether you call it a massive bull run or, sideways market that we have seen for the last 15 months, against that even a 10% rise in Nifty will look good. But what we are essentially saying is indices are not giving you the correct picture if you look at the earnings. The Nifty earnings have grown 2%. But the mid-cap coverage universe that we have of 97 stocks, they have posted 34% earnings growth. Even if one were to account for OMCs, we are talking about a 25% earnings growth in mid-caps. Now, this is the sixth quarter where mid-caps have outperformed large caps by a wide margin, and which is where we have raised the component of mid-cap in our model portfolio by 1,000 basis points over the last 6 months. So 10 to 12% earnings growth on a broad basis, and within that sharp outperformance of mid-caps is what we are looking at. And that's why we feel it's a market where the reward for bottom-up hunting is still very high. If you're looking at the large cap segment within the indices, 60 to 70% of the index weight, which is large banks, large IT, consumer staples, and if you can add Reliance, they are flatlining on growth. They are growing hardly at 5-7%. So the index, whatever 10-12% growth that we are talking about, that is essentially being driven by smaller sectors. So sectors like capital goods, cement, and likes. So therefore, till the time you don't see the big sectors coming to the party in terms of growth, it's more prudent to keep the expectations modest.
Okay. Gautam, good morning. Did I read correctly that to your mind, the broader end of the spectrum did deliver good numbers from within your coverage universe, and therefore is that to lead to an inference that while everybody is preferring the safety of the large caps, or a lot of people are preferring the safety of the large caps, you might be as a house fairly constructive on the broader end of the spectrum?
Absolutely, Neil. That's what we've been doing since April. So between April and October in our model portfolio, we've increased the weightage of mid and small caps by 10 percentage points. So what used to be 25% of the portfolio has now become 35% of the portfolio by active increase in weightage across sectors. And if you look at the growth, not just this quarter, but even for the last 5 or 6 quarters. So if you look at the annual FY25 numbers also, the overall earnings growth of 4%, but the mid-cap delivered 10 to 12% earnings growth last year. This year, we are talking about overall earnings growth of 10%, but within that mid-caps, we are expecting in our coverage, it's a fairly large coverage, 97 mid-cap companies, that is going to deliver 20% earnings growth as per our estimate. The soft point, however, is small cap, which is still struggling. So in small cap, for last few quarters, we've been seeing earnings decline, and this quarter was no different. This quarter also, we have seen a 5% earnings decline in our coverage universe of 142 small cap stocks, and it is led by or aggravated by financials. So without financials, even small cap have posted a plus 7-8% kind of a growth, but financials have been a big drag for both mid and small caps. In fact, if I were to just, I know I'm talking too many numbers, but if you look at our coverage universe of midcaps and look at the mix of financials, the growth is almost 60%. I know there are several intricacies there. There are several volatile companies where the numbers swing big time. So likes of Vodafone, likes of HPCL and all. But you have to live with that. Net, by removing all the external volatilities and commodities and all, even then you're talking about 20% plus growth for midcaps. Small caps still are struggling.
No, so Gautam, just on financials, because financials is, I think, the top pick for, a lot of analysts right now, comparatively, and maybe public sector banks more than private banks. You want to also do the consumption play then. So is there a distinction within the universe that you're seeing, and what are you preferring?
Yeah, so Tamanna, we also like financials. However, our preference for last 2.5 years has been more towards non-lending financials, which is capital market plays. So exchanges, brokers, wealth managers, asset management companies, and what have you, intermediaries and depositories. So that's a very, very juicy and attractive segment in my view. It's already done well over the last 2 years. We think over the next 3 to 5 years also, the runway for growth in the non-lending financials and capital market side is very, very high. Of course, it will not be linear. There will be a lot of challenges along the way. There will be a lot of regulatory, disturbances that will come along the way on variety of things. So you'll have to live with that volatility. But over a period of time, we have no doubt in our mind that capital market as an ecosystem will create tremendous wealth. Now, within banks, our preference has clearly been towards PSU banks. And in private banks, we like largely 2 or 3 large cap names, which is ICICI Bank, HDFC Bank, Kotak, and maybe AU Finance in the mid-cap space. So while in our model portfolio, private banks is a slight underweight to neutral, PSU banks are overweight, and non-lending capital market is a big overweight.
Any views on, since you talked about capital market play, I don't know if you've initiated coverage yet, Gautam, on Grow and what's happening with Grow post-listing? Is it a scarcity premium? I know you will not talk maybe about a specific stock, but just want to understand what you're making of what's happening there.
So as far as Grow is concerned, I'm not at liberty to discuss because we've been the IPO bankers. Okay. See, on a broader basis, you've seen how the capital market ecosystem has evolved from 4 crore demat accounts in March 2020 to 21 crores today. We have seen the SIP flows. We have seen the shift from behavior of people from being depositors to investors, savers to investors. So we are still at about, if you look at the total AUM of mutual fund industry, somewhere about 33-34% of bank deposit. This number was 15% 5 years, 6 years back. So there is a long way to traverse for this industry. And the beauty of this industry obviously is you have variety of plays. Within the capital market itself, you get high beta, low beta, stable companies, cyclical companies. So you have exchanges, you have brokers, you have wealth managers. The whole spectrum and gamut of plays are available. The only thing you need here is patience because things are not going to be linear, unlike in some of the other sectors within the financial space itself. So for example, you have insurance companies which tend to exhibit relatively less volatility, right? So we do like it, and we've been liking it for last more than 2 years now. In fact, we are one of the few houses we have coverage where coverage is there on almost all the companies.
We've run out of time, but always great to have you on, Gautam, and thank you so much for your time and for coming in. I'm sure you're also looking at all of the new listings and what their valuations are with a lot of interest, as are participants in the market right now.
They're profitable.
No, I think that is a filter not everyone is applying. Let's be honest.
Yeah.
Someone came on this channel and said profit nahi dikhane ka, then you have no question about valuation. All right. Always great having a chat with you, Gautam. So have a great day. With that, we have to wrap up India Market Open. But before we get in, we were talking about, I think the listing of the morning is clearly physics wala. And I was seeing the flashes that which he was sending in. And this is one bite that I thought we should play out when he talks about the whole social intent behind the